Lect 10% per annum. So before going to this, I will just ask you about the rules of debit credit, if you remember. Should I repeat my question?
Yes.
Do you remember rules of debit and credit? The golden three rules, or traditional approach, or the modern approach, whatever. Do you remember the rules of debit and credit?
Kind of. Debit is what comes to us and credit is what goes.
Okay, that's it.
And the three rules are nominal, real, and I don't remember the third one.
Yeah. Okay, it is personal account. So there are three accounts. So you can say that accounts is divided into three parts. The first one is personal account, second is real account, third one is nominal account. So for personal account, we talk about like any names or any institution names. So all these are included in personal account. Whenever we do transaction with some person, okay, if it is on cash basis, then we don't have to remember the transaction, remember the name. Yes, because if you are doing everything in cash, then why it should be remembered? It will be written in the book, but you don't have to remember the name of that person. But if you are selling goods on credit basis, if you're purchasing goods on credit basis, if you're doing any credit transaction with someone, then you have to remember the name of that person. Is that correct?
Yes.
Okay. So all the names, either it is person name or institution name or organization name, it is included in personal account. There are some accounts which is not name, but it is used instead of names, like capital, drawing. These are also personal account because it is used in place of owner's name. So that's why these are also personal account. Okay. Okay, let me show you one another screen so that it will be clear to you. Okay, so these are types of account. So any physical assets or sorry, name of any person or any institution is included in personal account. As you can see here, name of any person or institution is included in personal account. For example, Ram Mohan Sohan, Tata, SBI, Reliance. So there are some name of the person, or and there are some organization name like Tata, SBI, Reliance. Capital drawing, this is not a name, but it is used for owner's name. We cannot write owner's name. That's why we have to write capital or drawing or outstanding expenses, then prepaid expenses. These are called representative personal account, but you just have to remember that these are personal account. Okay. So is this clear?
Yes.
Okay. The next is a real account. Any physical asset or things which are used in business is included in real account. For example, cash, goods, machine, land, furniture. So whenever you start a business, there are some items that you use to run your business. Like you have to take purchase a building or rent it out. I'm not saying that you have to purchase it, but if we are purchasing it, then it is our assets. Okay, if we have furniture, then it is our assets. If we have machines, so anything that we use in our business for long term or short term, it doesn't matter. It is called real. Okay, so cash, goods means the item we are purchasing or selling in the business. So these are called goods. Okay, and cash, you already know. Machine, land, furniture, all these are goods. Is this clear?
Yes.
Okay. Now, the third one is nominal account. So all expenses and losses, income and gains of businesses included in nominal account. Why it is called nominal account? Because there is no real existence of these items. These are just a name in the business. Okay. Like if, let's say that you are traveling from one place to another place. Okay. And from a rental car, you can say. So for that purpose, you need to pay some amount to that person. Yes.
Yes.
What it will be called? Can you tell me?
Um, like you're paying, so
Rent. Yes. Rental of a car.
yes.
Okay. So let's say that you are like taking coaching classes. You are paying some amount to that person also, the teacher. So what it is called?
Um, it's the not
Fee.
the salary, but like income
It's
for
fee.
the teacher.
No, no. For you, I'm asking for you that what you,
Expense.
for you, it is a fee, tuition fee or coaching fee, you can say.
Yeah.
Okay. So there are certain things like this I'm talking about. So always you are paying money, cash, but you are using different names for it. So if you are paying that rental of a car, you are saying that it is a rental, but you are actually paying money, cash. In the same manner, if you are giving money to the teacher, it is called tuition fee or coaching fee. But in real, it is only cash. You are just naming it. Yes. So that's why it is called nominal account because there is no real existence of these items. It is just a name. Understood?
Yes.
So all the expenses, losses, income, gain of business is included in nominal account. Any expenses you are talking about. Now, only expenses like sometimes students get confused. Like if you are paying salary, it is expenses. But if you are purchasing machinery, it is not an expenses. It is investment. It is like you're buying property for business use. So it is not an expenses. Okay.
Okay.
So these are the real, personal, and nominal account. Tell me if you have any confusion in these three.
No.
Okay, now the rules. Rules of debit and credit. For real account, it is debit what comes in, credit what goes out. For personal account, it is debit the receiver, credit the giver. For nominal account, it is debit all expenses and losses, credit all income and gains. Means like if in the transaction you will be given the transaction in journal like depreciate machinery. Okay, now according to these three types of account, can you tell me in which category depreciation will go? Real, personal, or nominal?
Real.
Depreciation is real. Why do you think so?
Because it's like a physical asset.
No, no, no. Depreciate machinery, if you are saying, so machinery is a physical asset, machinery is a real. But what is depreciation? Do you know the meaning of
It's
depreciation?
yes, the reducing of the value of the asset.
Yes. So if you are reducing the value of the asset, it is real account.
No,
Then what it is?
it is nominal.
Nominal account. Yes, very good. Because it is loss for you. Let's say if you have a mobile phone that you have purchased for 20,000, okay, and after you have purchased it, after 1 month, the price is 15,000 only. So this is a loss for you. Yes or no?
Yes.
So if it is a loss, it is a nominal account. And according to nominal account, debit all expenses and losses means depreciation should be on the debit side.
Okay.
And there is a reduction in value of machinery. So you can say that machine is going. Yes, machine is real account. So real account rule is coming or going. So machinery is going. Yes or no?
Yes.
So machine should be on the credit side because it is credit what goes out. So depreciation will be on the debit, machine will be on the credit. But what was your answer? It was machine account debit to depreciation account. Okay.
Okay.
Okay. Also, the cost of goods sold, you didn't tell me, but let me explain this first, then we'll discuss the cost of goods sold part. So, real account is debit what comes in, credit what goes out. So, every time you will see a portion, a transaction, you have to find out that which accounts are included in that transaction. Like purchase goods for cash. So there is goods and there is cash. There is two items. So in every transaction, there will be two items. Maybe one of them is real, personal, or nominal, and the other one is also real, personal, nominal. So category may be different, but there will be at least two account always. Okay. So
Okay.
purchase goods for cash. So there will be goods and cash. Purchase machine on credit. Can you tell me what are two accounts involved in this transaction? Purchased goods on credit. Let me give a name also. Purchased goods on credit from Tata Motors. Tata Motors is
Ta-
company
Tata Motors to Bank.
name. Okay. Purchased goods from Tata Motors on credit. First of all, on credit means there is no cash payment or receipt. Yes.
Yes.
So there should be no cash in the journal entry also.
Yeah, I said bank.
Why bank? If it is credit transaction, do you think he will pay through bank?
Yeah.
Credit transaction means there is no cash or bank payment. Nothing paid.
Also, purchases to Tata.
Yes, this is the entry. So
Okay.
why you mistake like first time there is a mistake in journal entry. So why that mistake in
I don't know. Mm,
actually I didn't explain anything. I just said that it is a credit transaction. But after I said that, you have said the correct entry. So it's in your mind, but first time you said incorrect.
Yeah. Actually, last year we didn't have a teacher for accounts, so we had to learn everything by ourselves.
Okay. So now you're getting what I'm saying, like
Yeah.
purchase account debit to Tata Motors because goods replaced with purchase or sales. So if you're purchasing goods, it means goods is real account and goods is coming. Yes.
Yes.
So there should be purchase on the debit side. Or you can say that if you're purchasing goods, it is an expenses. So expenses is always written on the debit side. So you can solve this question by two methods, by assuming goods as like real account or by assuming purchase as a nominal account. And the second item in this transaction is Tata Motors, which is a personal account. And he is giver of goods. So in personal account, credit the giver. That's why Tata Motors is on the credit side. Okay.
Okay.
So any doubt?
No.
Okay. Just 1 minute. I will be back. Okay. So now the second account, like debit the receiver, credit the giver. Whenever there is a name in the transaction, you have to see that either he is giving some item or he is receiving some item. But before that, you have to understand that if it is a two-side transaction, then we never write name. You have to remember this. Like if we are purchasing goods for cash, let's say I will write it a transaction here. Just understand this. Purchased goods for cash from uh, Vikas. Okay. Now in this transaction, Vikas is giving goods, yes,
Yes.
and he is receiving cash. So it is a two-side transaction. Means he is giving goods and he is receiving cash. So there is nothing on credit here. We don't have to remember his name. In cash transaction, name is not important. Okay.
Okay.
Payment of salary to B. Payment of salary to B. Now, again, salary is paid. So name is not important. Okay.
Okay.
So when name is important, then when it is a credit transaction, when we are not paying for something that we have purchased. Okay. We are not paying for service that we have received. So anything like this will be, we will write name of that person from whom we are doing transaction. So if it is purchase goods on credit from Vikas, then we have to write Vikas name. If it is sale of goods to Vikas, then also we will record the name. But in payment of salary to B, uh, it is a expenses transaction, nominal account transaction. So for nominal account, we always write outstanding or prepaid instead of names. So again, if there is nominal account, then we don't use names. Okay. So these are some rules for journal entry. You have to remember these rules. Okay, can I give you one more transaction? You will try to solve it.
Yes.
Okay. So goods destroyed in fire.
Loss by fire account to cash account.
Again, cash.
Uh,
You like cash? In every
no.
transaction, you are saying cash.
Loss by fire account to
Purchase account, yes.
purchase account.
Because we are our goods is destroyed. So we have to write purchase. If cash is stolen or destroyed, then we will write cash. Okay.
Okay.
Okay, so these are the rules of debit credit. You have to remember these. These are very important, and it will be used in 12th also, because sometimes you have to remember like which account is debited or credited or why. Okay, so nominal account, debit all expenses and losses, credit all income and gains. So all the expenses or loss will be debited, all the income and gains or profit will be credited. Personal account I have already told you, real account I have. So this is the journal entry. Now the second part. After this, there is ledger. So question of ledger, your answer was almost correct. Yes. So that's why I have ticked it. What are the steps involved in preparation of ledger? Actually, there is three steps that we can say the name of. It is called posting. The first step, posting means transfer of entry from journal to ledger. Journal to ledger. Then there is second called totaling. Calculation of total of both debit and credit side of any account. So if you're preparing any account, you have to calculate the total of debit and credit side separately. Why? Because we need to write the total, the highest one on the both side. Okay. After that, we need to calculate balance. So the third step is called balancing. Now, your answer was not like this, but you have said all the steps in the example form. That is also correct. Actually, I'm not uh, asking you question to know that how was your theoretical knowledge. No, that is not so much important in 12th. You have the practical concept or not. You can solve the question on the basis of your knowledge or not. It is important in 12th. So that's why your answer was correct, because you have told me the example of everything and it was correct. So you have to remember this now, that there are three steps: posting, totaling, and balancing. Okay. How the balance is calculated? From the highest total, we deduct the lower side total, and that is our balance. You remember this?
Yes.
Okay. So this is the ledger. Actually, in ledger, there is not much theory part. So that is what we have as theory in ledger chapter. The third concept was about cost of goods sold. Actually, the trial balance. So trial balance concept after the ledger. Actually, I'm just giving you an overview of all the topics that can be required, that can be given in 12th chapters. And I'm making sure that you don't have any problem in understanding the question in solving the journal entry or ledger that we will prepare into it. So that's why I'm giving. If you think that I'm going too fast, you need some explanation in any chapter in detail, you can tell me. I will explain everything. Okay.
Okay.
Okay. So do you have any question, any doubt in whole of this 4 or 5 chapters that I'm talking about: journal entry, ledger, trial balance, financial statement, or accounting equation? Anything?
Yes, in
Depreciation of,
trial balance.
yes. Tell me, what is the problem?
Like after we make the ledger accounts, I don't know where to put which side. Like which side
Yes.
do I put? Debit or credit?
Uh, okay. So first of all the assets will be written on the debit side. Now, what asset includes? So cash, stock, opening stock, and then there is furniture, machine, building, land, all the assets will be on the debit side. Okay. Then
Okay.
there is liabilities. So liabilities should be written on the credit side, like loan, overdraft, creditors, bills payable. Okay. These things will be written on credit side. Debit side, cash, furniture, debtors, machine, land and building, like this. Then there is third item, capital. So there is no explanation of capital. Capital is always on credit side. Now, and then there is income. Income is written on the credit side, like discount received, rent received, interest received. All these are income, and it will be on the credit side of trial balance. Then there is expenses. All the expenses will be on the debit side. Salary, rent, discount, then electricity expenses, printing and stationery, anything, any expenses will be given. It is written on the debit side. Now there are some items which is not included in all these categories. So there is a drawing. If it is given in the quotient, it will go on the debit side. If there is opening stock, it will be on the debit side. Okay. Purchase is on the debit side. Purchase return is on the credit side. Sales is on the credit side. Sales return is on the debit side. Okay. Is this clear?
Yes.
Now, the formula of cost of goods sold is opening stock plus purchase plus purchase plus direct expenses minus closing stock. This is the formula. You have not attempted this. You don't remember cost of goods sold formula. Now, the problem is that the question was not only this, like what is the formula of cost of goods sold. I have asked that what is cost of goods sold and how it is shown in the trial balance. So first of all, in trial balance, you have to see item-wise details. Opening stock, it is written on debit. Purchase, it is also written on debit. Direct expenses, it is also written on debit side. So most part of cost of goods sold is on the debit side. Only closing stock is not included in the trial balance. Closing stock is not a part of trial balance. Okay. So we have to write only these three on the debit side. But what we are doing actually, we are deducting closing stock, which is not included in the trial balance. So what we have to do now is, if we write cost of goods sold on the debit side, debit side, and closing stock also on the debit side, then what will happen? Then our answer is correct. Just I'm changing this formula. I'm taking closing stock on the debit side. So what will be the formula? Can you tell me if we bring closing stock on the debit side?
We can add them and
What will be the formula? Just tell me, like what will be on the debit, sorry, on the left side, on the right side.
opening stock will be on debit side, purchase will be on debit side, direct, direct expense will be on debit side, plus closing stock instead of minus.
I'm not asking that. Your answer is correct, but I'm not asking that what you're saying. Okay, I'm saying that you have seen this formula: cost of goods sold equals to opening stock plus purchase plus direct expenses minus closing stock. Okay, so as per the mathematics concept, if we change the side of one item, which is either positive or negative, then that item sign change. Yes.
Yes,
So if we bring closing stock on the debit side, then it will be cost
plus,
of goods sold plus closing stock. This is what I'm asking. Equals to opening stock plus purchase plus direct expenses. So if we are not writing these three things on the debit side, and if we write these two things on the debit side, then it is also equal. Yes.
yes,
So that's why cost of goods sold is written on the debit side of trial balance and along with closing stock. Understood?
yes,
So in that case, opening stock, purchase, and direct expenses will not be written. Only cost of goods sold and closing stock will be written on the debit side, because total of these two will always be equal to opening stock plus purchase plus direct expenses. It is clear now?
yes.
Okay. Do you have any doubt about which side we have to write all the items? Because I have written all the item detail here. Still, if you have question about the side of specific item, you can tell. And if it is clear,
Um,
you can also tell.
yes, it's clear.
Okay. So now we will move to the third, or actually accounting question formula. Your answer was correct about that. Accounting question, yes. Yes. Assets equals to capital plus liabilities. Okay. So that is correct. Now, financial statement. So in financial statement, there are three parts. Can you tell me the name if you remember?
Trading account, P&L account, and balance sheet.
Very good. Trading account, profit and loss, and balance sheet. Very good. Now, for definition part, uh, sorry, first of these two, first of these two is part of income statement. Means under this, we calculate profit or loss of the business. So it is called income statement, and balance sheet is called position statement, because it will tell us about the assets and liabilities of a company on a certain date. So that is why it is position statement. So if we put this in definition, then it will be financial statement is a statement which is prepared to show the financial performance or financial result of any particular period and financial position, like how much assets or liabilities we have. So financial position on a certain date. So performance is calculated for a particular period and financial position is presented on a certain date. So what does it mean? So whenever we say that, like to any student, if you ask the result, they will tell you that I have got this much marks in 10th or 12th or graduation, any level. So they will tell you about this. Now, if they are saying that they got this marks in 10th, it means this mark is related to whole year, not on a certain date only. It is related with whole year. So how he have solved some question, how he have memorized the theory, how he have given the exam, all these are part of that result. Yes. So that is why performance is always related to a certain period. But when we say that how much money you have, if I asked to any student or any person, how much money do you have? He will tell me the money he has on the same date at the same time, not of previous day, not of the next day, because maybe on the next date, the amount he has right now will change. Right now, let's say he has 1,000 right. So if I meet him after 2 days, then he will tell me that he has only 600 left, or he will tell me that now he has 3,000 rupees. So the amount he has is related to a certain date. So that's why financial position is related on a certain date with a certain date, or financial result is related to a particular period. Is that clear?
Yes.
Okay. Now the trading account shows the gross profit. Yes.
Yes.
So in trading account, we only write direct expenses or income. Direct expenses and income. Now, what does it mean? It means what is the main business of any company? It is called sales. If you are selling goods, whatever your main business is, if you're selling that good, then it is called sales. If you're purchasing the same good, then it is called expenses. It is your purchase. So all the expenses which is either related with manufacturing or purchase is direct expenses. Okay. And all the other expenses which is not involved in manufacturing process or which will not become a part of any product, then it is indirect expenses. Like if you're making of you have a business of producing furnitures, like you are making wardrobe, table, chair, and sofa, bed, all these things you are making with timber or other things. Now, uh, for you, the timber cost is direct expenses. Any wages, any freight that you pay to bring timber to your location is also direct expenses because these expenses are required for purchasing or producing. If you are paying wages to any labor to make furniture, then it is also direct expenses. But the rent of showroom, is this a direct expenses?
No.
Because the rent of showroom is not needed for production or manufacturing, uh, or you can say for purchase. It is for sale purpose. So it is not a direct expenses, it is indirect expenses. It will go to the profit and loss. Okay. Now there is two items which is similar, like wages and salary. Can you tell me the difference between these two?
Wages is something you get like daily or day to day, and salary you get after a
One
month.
thing, you have to remember that you have to think from the point of view of business. Okay, uh, you don't have to choose the point of view of the worker or the employee or any other person. You have to choose the point of view of owner of a business. Okay.
Okay.
Now, for you, what is wages or salary? What is the difference between these?
Wages is something you get because of the day to day
Again,
operations.
you're saying wages that you get. No, wages that we will pay because we are owner of the business. We have to take the point of view of owner, the business. Yes.
Okay. Yes.
Okay.
So it's
So
what you give for the day to day activities, and salary is what you give after a month to the employees.
very good. Yes. So wages we pay on daily basis, and salary we pay on fixed basis, on timely basis, like monthly. Sometimes salary is paid weekly also. So, but generally it is monthly basis. So salary is indirect because we pay it to the employees. And what employees do, they like they use documentation for cleaning purpose. There is employee for like guarding of office. There is employee. So all these things employees do. What is for wages? It is for manufacturing. It is for bringing goods. It is for loading, unloading of goods. So wages is more, in most cases, it is related to purchase or manufacturing of any item. So that's why wages is direct expenses, salary is indirect expenses. Okay.
Okay.
Now, in trading account, we calculate the gross profit. So gross profit is also direct profit, but it is not the final profit. Final profit is calculated in profit and loss, which is net profit. Because this profit is not overall profit. After this, we deduct some other items. So those items, after deducting those items, we get the net profit. This is the final profit of any business. And to calculate this, we need other income and other expenses. Other income and expenses. So in trading account, we have written only direct income or direct expenses, but here in profit and loss account, we will write other income and other expenses. So all the other expenses like printing and stationery, audit fee, uh, you can say cleaning expenses, salary of employees, rent, electricity, telephone bill, mm, or you can say depreciation. All these expenses are indirect expenses, so it will be written in profit and loss account. And all the direct expenses are written in trading account. So gross profit, when we have calculated it, it is transferred to profit and loss account, and then net profit is transferred to which account?
Balance sheet,
Balance sheet. Okay, where
liability side.
balance sheet, liability side, capital. We add it to capital. So this is the net profit. Now we will talk about balance sheet. So in balance sheet, there is two sides. Balance sheet is not any account, it is a statement. So that's why there is no debit or credit in balance sheet. There is two sides. One is called equity and liabilities, and the other is called assets and properties. But we write only liabilities and assets. Okay, so like cash, machinery, furniture, uh, land, building, all these items will be written on asset side. Then in the liability side, if there is any loan, creditors, capital, in capital we have to add profit, net profit. In capital we have to deduct drawing. So all these items are written in balance sheet liability side. After actually the capital part, uh, after writing capital, we add net profit, we deduct drawing, the final amount is written in outside amount column. In asset side, all the items is written. Now, there is a thing that our balance sheet should match always. Can you tell me why our balance sheet should match?
Because liability should be equal to asset.
Yes, very good. Liability and capital should be equal to assets. So the formula of this is assets equals to capital plus liabilities. Now this formula we have discussed in accounting equation part. Yes.
Yes.
Okay. This formula is based on dual aspect concept. What is dual aspect concept? So dual aspect concept tell us that every transaction have two sides. Every transaction. So if one thing you are receiving, then one thing you have to give. Either you give it now or later, but you have to give another item. So that is what dual aspect concept. If one person is receiving the goods, then one person is giving the goods. So that is also dual aspect concept. So in any manner, if you want to look at the transaction, you will find that every transaction has two effects and both effect is same. Okay, like if there is effect on the debit and credit side, then the amount of effect will be same. So that is what dual aspect concept means. Okay.
Okay.
Okay, now in balance sheet there is another concept that you have to remember, that your application of fund should always be equal to your source of fund. You're comfortable with Hindi because sometime in some of the explanation there are some words that I use in Hindi also. If you're not, then I will not use.
No, it's okay.
Okay. Okay. So application of fund and source of fund means कितना पैसा आया है बिजनेस में उतना ही पैसा यूज हो सकता है. Yes or no?
Yes.
If you receive some amount, then you can use only that amount. You cannot exceed the use. Like you have only 1,000 and you have spent 1,200. It means there is 200 on credit basis. Yes. So if you
Yes.
have invested 1 lakh in the business and you have purchased 1,20,000 worth of goods, it means there is a liability of 20,000. So again, it is equal. This is your capital.